4%. And when we look at the central bank rate, which have been revised of recently, is around 6.25 from the previous central bank rate, which was around 5.75. And when we look on the central bank rate discount, is around 8.75, and the exchange rate between USD and TZS is around 2,624.74. And our current public debt to GDP ratio, it is around 48.7% according to 2026 IMF first estimate, which as we've been told by the Minister of Finance that our public debt to GDP ratio is still sustainable. So I will take also on the DSE financial performance result for the second quarter of year 2026. And in this summary, I've just presented the overview of the total revenue growth, where when we are comparing on year for the first half of year 2026, our revenue have grown by 79.78% compared to the same period last year. And when you look on our profit after tax on year, it has grown by 88.83%, and the profit before tax has grown to reach by 93.78%. And when you look at our basic earning per share on year, it has reached 260.26 compared to the same period where our basic earning per share was around 137.82. And the key driver for the good performance for this year has been the increase in equity turnover, where we've seen that in the year 2026 first half, especially for the month of June, we've seen that the month of June only have recorded a turnover of around 291.82 billion. When we are looking on the previous year, this turnover that we've recorded in the month of June is equivalent to the full year of maybe 2024 turnover that we recorded. So also when we look on our other sources of income, especially from our subsidiary, the company CSD, we've seen also the growth in the registered in the CSD fees, 6.76%, which is a significant growth compared to the previous. And when we are looking on comparison between our revenue growth compared to our expenses growth, we have seen that our revenue growth has reached around 79.78%, which outpaced our expense growth, which was around 68.99%. Ultimately, that has also improved our cost to revenue ratio. When we compare for the first half of year 2026, our cost to revenue ratio have reached 53.09 from the same period last year, where it was around 56.48%. And I'll just also take you through on the composition and the makeup of our total revenue. Our total revenue for DSE is made of listing fee, where we've seen for listing fee here, we are talking about the listing fee that we are getting from the listed companies, as well as the listing fee from the listed corporate bonds and the listing fee from the listed government bond. We've seen that the income that are coming from that line for the first half of the year 2026 have increased by 5%, where in the previous year we recorded a listing fee revenue of 2.65 billion, but this year we've recorded a listing fee on revenue of 2.78 billion. This has been attributed by current new issuance from the different issuers. As we've seen that we've listed bonds from iTrust, we've listed the right issues from Marine, and also we've listed other corporate bonds from the TMRC and several others. When we talk about transaction fees, here are the fees that the group realizes from the trading of equity. and the debt instrument. And you have seen that this year we have recorded a turnover on equity for the first half of the year that have reached around the 1.067 trillion, which you can say is a significant milestone. We have never reached this kind of turnover since the exchange that has been established. So when you look on our transaction fee revenue has gone up by around 209.64%. As well, when you look on our register in the CSD fees, also depends from the turnover on the equity in the bond, is also rose to 2.64 billion compared to the same period, 1.28 billion, the increase of 106%. Also, our revenue from other core revenue have also slightly decreased, but revenue from other non-core revenue, here we are talking about investment income, have grown up to reach around 2.6 billion, which is the increase of 342.76%. So overall, our top line have increased by 79.78%, and has reached Tanzania shilling 13.99 billion compared to the same period, where we realized the amount of 7.78 billion. Also, I will just take you on the revenue mix, which I have just mentioned, but the composition, our revenue mixed, compared the current half year with the same period last year, we've seen that there's a shift that our transaction fees have contributed to around 36.7% of our revenue, while in the same period last year, it was around 21.3%. Also, when you look on our register in the CSD fees, have also contributed to 18.9%, while in the previous year, it contributed to 16.4%. So we've seen that the exchange now is becoming more dependent from its core operation, unlike in the previous year, where our significant part of our income was coming from investment income. So this, I think, is being diluted with the current trend. And when we look on our efficiency, especially on the expenses, we've seen that the expenses have gone up by 68.99%, where these expenses are made up for staff costs, administration expenses, as well as operating expenses. For staff costs, have gone up by 34% when you are comparing year on year, and the but overall, costs have increased by 68.99%. And the major reason for the increase in our expenses in the first half of the year 2026 is because, first of all, is the staff incrementing and the additional number of staff, as we've seen that the exchange is expanding a number of operations, and the number of volume that we are recording are higher, as well as the need for efficiency in technology. So we need to acquire a number of staff so that to deliver our strategy. And apart from that, operating expenses which have gone up, we've seen that there are those expenses which vary with the level of activities. So the expenses, when they go up on those areas, ultimately also lead to the increase in the corresponding revenue. So those expenses that vary with the level of activities also contributed to the increase in the expenses. But the good thing that the same increase was offset by the increase in the revenue. That's why we've managed to record it, the profit which is higher compared to the previous periods. And when we talk about profitability and the key ratios, we are reporting that margin for the first half of year 2026 we have increased to reach 42.21%. And as I've explained on the cost to income ratio, have also decreased to reach 53 compared to previous year 56%. And the profit after tax margin have also increased to 43.5% when comparing to the same period previous year. And the improvement, as I've explained, has been due to the increase in our revenue from our core operations, as well as the increase in our income from our investment. So here I also presented a summary of our detailed income statement, which we are comparing the current half year compared to the previous half year, and a lot of items I've explained. And also, I have also presented the summary of first half year performance in terms of or loss statement, where, as I have explained, we have managed to achieve a group revenue of 13.98 billion compared to the previous period, the same period of 7.79 billion. And when we are looking on the profit before tax for the group, we've managed to record a profit before tax of 6.56 billion compared to the same period where we recorded a profit before tax of 3.385 billion. And when we are looking on profit after tax, we've realized the amount of 6.2 billion compared to the same period last year where we recorded a profit after tax of 3.2 billion. And when we look on the sum of the key ratios, the basic earning per shares have increased from 138 earning per share to 260 earning per share for year 2026. And when we talk about the return on equity, have improved from 9% that we recorded in the previous year to 14% that we recorded to 17% that we recorded in the first half of the year 2026. And the return on the asset have also increased from 8.5% to 14.2% in the year 2026 first half of the year. And the cost to income ratio, as I've explained, is also improved to reach 53% compared to 57% that we recorded in the first half of the year 2025. As I have explained, the key market drivers for good performance in the year 2026 first half was the equity turnover, where we've witnessed significant turnover that have reached around 1.067 trillion, as well as bond turnover. We've witnessed that for the first half of the year, bond turnover has reached around 2.598 trillion, while in the same period last year, the bond turnover have reached 3.11 trillion this year, while in the same period last year, 2.598 trillion. And when we look to another area that has contributed to good performance for the first half of the year, it is the new product, is the exchange traded fund. We've seen that also the turnover on the ETF, specifically the iTrust Large Market Cap ETF and the Vertex ETF, have reached a turnover of 101 billion in the first half of the year, while when we are comparing with the same period last year, we didn't have this product. So internally, we have other cooperating revenue, especially from retaining, where we've seen also that we have enrolled a significant number of investors who were trained on the SIT courses. And in that aspect, we have realized around 280 million for the first half of the year. And also when you look on our data revenue, we've also grown up significant for the first half of the year. We've reached around 370 million. So that's is a summary of financial performance for the first half of the year. So the next slide will be around overview performance of the market. So I will request I'll bring back to the presenter ITRUST so that they can pick some questions around the profit around the performance for the first half of the year. And if our CEO Peter is ready, or he can continue the to the
Hello,
questions.
Lucas. I'm not sure if you can hear me now.
Yes, I can hear.
Okay, good afternoon, everyone, and apologies for starting late once again. It was due to challenges on my end. Traveling currently, I'm outside of the country, and I'm using the hotel Wi-Fi, and simply the security settings were initially preventing me from connecting audio and video, hence the delay. That said, I've been able to follow from the beginning when we started, and thanks to iTrust for organizing this, and thanks to Lucas, our CFO, for taking us through the first part of the presentation. So far, I see only one question from Daniel Swipe, who's asking which quarter are we talking about. The chart of statement of profit and loss and the other comprehensive income shows comparison in current quarters. So which quarter are we talking about? Currently, we're talking about the second quarter of the calendar year, which is our second quarter of the financial year. Our financial year's DSE is from January to December, so we're talking about the quarter from April to June. I don't see another question, but I know there'll be some that will continue flowing, so the iTrust team will keep picking this up. But we can go on. So Lucas has presented very well how we've done on the financials for the quarter starting from April to 1st to June 30th. And also at some point, you also connected how the picture looks at like from the first half of the year from January to June, that is. Now, the slide that you're currently seeing shows the evolution of the DSE share price. I've shown a one-year horizon from 1st of July last year to the 30th of June this year. And basically shows that we grew from the 1st of July last year. We had an opening price on that day of 2,850, and it closed with a price of 3,000 shillings per share. And that grew to eventually hit on the 30th of June. We opened with a price of 6,410 and closed with a price of 6,300. But if you just zero in, for example, if you look at when we started the quarter, apologies, the second box there says 1st June. Actually, should be 1st of April. And the 1st of April at 6,540, and it closed at 6,500. So basically, if you look at 1 year horizon, we've more than doubled our share price. So the returns that you as shareholders are receiving beyond the dividends which we paid towards the end of June, also the increase in share price as a result of the performance that Lucas just outlined. If we can move on, Lucas. So getting into the specifics of the performance, looking at the market capitalization, as at the end of the quarter, market capitalization grew to 35.175 trillion shillings. Equivalently, this is around $13.4 billion using the exchange rate that takes the average of the daily WAR from the BOT Interbank Foreign Exchange Market. And this is a growth of 79.11%. Compared to where we were at the same period last year, where our market capitalization in shillings term was 19.639 trillion shillings. If you just look at the 22 domestic companies listed, the domestic market cap grew to 23.74 trillion as at the end of Q2, that is the end of June 2026. And this is a growth of 84.85% when you compare to the second quarter of last year, where the market capitalization was at around 12.845 trillion shillings. And the largest contributor to this movement is NMB, which has taken back the number one position in terms of being the most valued company on the exchange. And we closed the quarter at 8.015 trillion shillings, market cap for NMB, followed by CRDB. And CRDB had a market cap of around 6.899 trillion shillings. So NMB is leading the pack, and there are about 8 other companies that follow NMB and CRDB, which have a market cap of around 1 trillion shillings or more. And 6 of these being domestic companies, NMB at 8.015 trillion, as I mentioned, CRDB at 6.9 trillion, followed by TBL, Vodacom, Tanzania Security Company, and Tanzania Portland Cement, that is Tuge Cement. And the 2 cross-listed companies that make up the 8, the list of 8 is KCB Group and East African Bros Limited. Looking on the ETF, as Lucas mentioned, this is a new product that we didn't have last year. It only started towards the end of the year, with the first listing being Vertex ETF, which was listed in October 2025. But looking at the market cap for ETFs, we stand at 187.52 billion shillings at the end of June 2026. And we don't have a comparative quarter for last year, as I mentioned. But if you compare to Q1 of 2026, it's a growth of around 2.19%. We closed Q1 of this year, that is March 31st. The market cap for ETF was at 183.49 billion. Next slide, please. And the slide that you're currently seeing shows the evolution of the equity, and so that should be ETF, not ETC, equity and ETF market cap trend. So combined equity and ETF, as at the end of January, it's at around 28.6 trillion shillings. And that grew, we hit 34.8 in February, dropped a bit in March, but then started gaining pace again to close the first half of the year, 35.4 trillion shillings, which is a contribution of around 35.18 from equities and around 185 billion from ETF. And if you look at the index performance, looking at the all-share index, the DSEI, the DSEI grew from 2,353.86 points as at the end of Q2 last year to 4,048 as at the end of Q2 2026, which is a growth of 72.01% year on year. So you can show that you can see that it grows pretty much at the same pace as the growth in total market cap, which grew at 79%. And if you look at the Tanzania share index, which looks at the domestic companies only, if you look at the end of Q2 last year, we were at 4,852.34 points, and that grew by 80.88% year on year to get to 8,777.1 points as at the end of Q2 this year. And the major contributor for this growth was the bank, finance and investment subsector, which comprised of the listed commercial banks, led by NMB, of course, which I've already mentioned, leads the market with the largest cap. But also beyond banks such as NMB, CRDB, DCB, Commercial Bank, Mkombozi, Maendeleo, and KCB, of course. We also do have non-bank financial institutions and investment companies, including DSE itself. But we also do have the likes of AfriPrize, and we also do have the likes of NICO. And again, if you look at the growth of the domestic, the Tanzania share index, it grows in tandem with the growth in the domestic market cap, because the domestic market cap, as you saw earlier, grew at a rate of 84.85% year on year, whereas the index grew at 80.88%. And the graphs that you're seeing currently just shows the evolution from January to June this year of the all share index on the left and the Tanzania share index on the right. Moving on, Lucas, to market liquidity, which is the main driver, the lifeblood of the exchange. We do earn a lot of our revenue from trading activity, as Lucas mentioned when he was sharing the financials. And looking at the turnover, the total equity market turnover during the second quarter of the year was $496.80 billion, or roughly $189.3 million, which is a growth of 227.24% when you compare to the equivalent quarter last year, where the market turnover was 151.81 billion. On a year-to-date basis, if you look at January to June, the total turnover was 1.068 trillion shillings, which is an unprecedented performance. And compared to last year, we grew by 61.94% looking at last year full year, meaning last year, January to December, we had around 659.4 billion. But this year, during just the first half of the year, we've already surpassed the full year last year by almost 62%. So from 659.4% full year to 1.06785 trillion just in the first half of the year. And looking at the domestic market, the turnover during the second quarter of the year was 493.97 billion, which is a growth of 233.2% when you compare to a similar quarter last year, where the turnover was 148.3 billion. And the top five contributors in terms of turnover: CRDB, NMB, TBL, TCC, TCCA, and TCL. Which is a similar picture as we had during the first quarter of the year. But the good story is that while CRDB still continues to contribute heavily at 35.36% of total market turnover, it's a much diluted position compared to the first quarter, where CRDB contributes 62.5%. And for our investors who are joined us during the call last quarter, you may recall that one of the concerns that we shared as DSE management, and concerns that investors also shared during your reflections, is the reliance and the concentration on CRDB. But the good thing is other accountants have come up and they've diluted the contribution from CRDB, even though it still contributes to more than a third of our turnover. And if you look at the contribution for mobile trading platform, because it's our main growth area when it comes to increasing number of investors, increasing liquidity, the contribution from MTP, if you take out your pre-arranged deals and just look at the normal trades, that is, we exclude pre-arranged block trades, the contribution from MTP from our mobile trading platform was 174.57 billion, which is around 82.38% of the turnover from normal trades. And the reason why we're excluding pre-arranged trades, because those don't go through HCA journey. Those would be pre-arranged between brokers representing the different institutional investors, and they'll be settled outside of your normal board prices. Now, looking at fixed income securities, this combines government securities, corporate bonds, sub-sovereign bonds, and sukuk securities. During the second quarter of the year, we saw a slight decrease of around 1.03% of turnover and fixed income securities from 1.467 trillion last year, or 1,466.98 billion last year, to 1,462.05 billion this year, or 1.462 trillion, if you like. Now, the drop can be attributed in part by movement towards a preference towards equities. As we've seen, there's been a significant surge in equities during the second quarter of the year. But also, we've had a number of new IPOs coming through from fixed income side. We had about 5 corporate bonds that were listed. So some of the money also was channeled towards investing during IPOs in the primary market. But on a year-to-date basis, as was mentioned by Lucas earlier, we still are trading very well, where we've actually increased from around 2.25 trillion during the first half of 2025 to 3.03 trillion during the first half of this year. Now, the graph at the bottom there just show you the trend month on month of turnover and volumes if you compare month on month and quarter this year as well as last year. And the currently outstanding position of security that are listed, we have those that are denominated in shillings, amounting to around, sorry, just a minute. Need to get my numbers right here. Yes, those are that are denominated in shillings. It's around 1.86 trillion, and those that are denominated in dollars, it's around $186 million. Altogether, if you convert the exchange rate that you're using to shilling terms, we have around 2.35 trillion shillings of worth of fixed income securities that are currently listed. And we do have 22 securities listed, the most recent one being the iTrust bond, which was listed towards the end of June, having raised more than 114 billion shillings, which is outstanding for a corporate bond issuance. And congratulations to our host for the day, iTrust. If we can move on to the next slide, Lucas. In terms of the IPOs, I did mention earlier that we had about 5 new listings, all of them coming from fixed income. And the listings, Lucas, if we can go to the next slide. So we have 5 with Makazi bond being listed at the beginning of the quarter on April 2nd from First Housing, 28.8 billion, followed by EFTA about a week and a half later, 33.04 billion from Equity for Tanzania. That was listed on the 13th of April. On the 28th of May, we had Mapato Sukuk, the loan Sukuk issue listing on during the quarter from KCB Tanzania, having raised 30.24 billion. And Nyumba bond from TMRC listed on the 12th of June, having raised 30.24 billion. And the last one, as I mentioned a few minutes ago, iTrust bond from iTrust Finance listed on the 29th of June, having raised 114.12 billion. Altogether, the 5 listings managed to grow our fixed income listings by 236.42 billion. Now, if you compare this to the second quarter of last year, it shows that we have a drop of 37.21%, which seems quite huge, but it's due to the fact that last year we had massive listings from Zanzibar Sukuk 1, where the shilling leg raised 164.6 billion shillings and the USD raised 80.74 billion. So it was only listed from one issuer, TZS, and USD Sukuk from Zanzibar Sukuk 1. But this year, the good story is that we had listings from 5 different issuers during the second quarter of the year. Moving on, the last piece that I want to talk about is our investor activity on onboarding of new investors. During the quarter, we had 69,134 new CDS accounts being opened, and most of these came from through MTP. And the total number of accounts that were onboarded on MTPs was 48,657. A few of these were completely new joiners, so they opened new CDS accounts straight through MTP. A few were existing investors that were onboarded that had already had CDS accounts. And if you look at the changing landscape of our investor base, currently, if you look at the total base of investors, which is the graph on the left there, we're seeing age group 41 to 50 comprises the majority of investors, but the demographic is shifting because a lot of our new investors that are signing up are those aged 21 to 30, and most of them are joining through MTP. So if you look at the MTP investor registration, the leading age bracket is 21 to 30 years. With those few remarks, once again, we do apologize for starting late, but our target is that we wanted to end the presentation during the first hour so that we allow at least another hour or so for Q&A. And with that said, I'll pass it back to iTrust. Winfried, I see there's a number of questions that have been shared already in our chat from our investors. The first one is from Saidi Nyenge. Yes, we're happy to share the slides. There are a few typos which we highlighted. I'm sure you'll be also able to pick up. But yes, because I know the number of investors, your contacts, iTrust have your contacts, so iTrust will share with the contact list. And anyone else that is not necessarily the contact list, may reach out to either us directly or to iTrust and request to get the slides. Or Lucas, you can also share here on Zoom if that's possible.
Thank you very much, Mr. Peter, for an insightful presentation. I believe people have been able to get an overview of the Q2 performance, and they'll learn more as we keep going. So we have a few questions. One question is, on the last call, it was promised that fractional shares trading will be introduced. Any development on that?
Yes, there's been some movement in that we have made advances in terms of our internal alignment as DSE in terms of how our system is supposed to work, finalizing development of the trading rules. Currently, while those developments are ongoing internally, there's been a bit of a slowdown in terms of the readiness or willingness of the promoters to create these fractional shares. But it's still work in progress. We hopefully will, before the end of the year, have first fractional shares in trading on the exchange. So on our end, all the groundwork from an infrastructure perspective has been done, and we're working with our licensed broker fund managers to bring these products to market, because you need someone to create the fractional shares and to promote the same.
Thank you, Mr. Peter. The next question is, what contributed to the 34% increase in staff costs? Was it due to increase in headcount, bonuses, or salary adjustments?
So it's a combination of both the increase in headcount, as Lucas shared, as the exchange is growing, we've been recruiting new staff, primarily in the technology space, because increasingly we're realizing that technology is and exchanges, not just DSE, are becoming more like technology companies. So our fastest growing department is the IT team. But generally across board, we've been growing for both DSE and CSTR. But additionally, of course, we do adjust for salaries based on inflation, but also based on performance, last year's performance. And yes, we did pay a small amount of bonuses this year, which we didn't last year. Hence the increase. And of course, the staff costs, once you increase the salaries, some related costs as well, like pension fund contributions, skill development leave, and the like, also do increase in tandem as well.
Thank you very much, Mr. Peter. The next question is, do you have visibility into the composition of your market capitalization by investor type? That is to say, institutional versus retail. And how has this mix evolved over time? Following to that question, he indicated, can he get some indication of the PE ratios for the key sectors, banking, FMCG, tech, cement, etc.?
Okay, I think that's from Henry Robin. Thank you. On one, yes, we can get sight of market cap by investor type. Apologies, I don't have that off the top of my radar, off the top of my fingertips. It's something that we need to compute and maybe share as an action going forward. After this, we'll take some actions, and any information that has been requested that we need to share, we'll share through our website and social media, as well as through iTrust. So we'll provide this for you. But what I can say at a very high level is that increasingly, a lot of our activity from a trading volumes perspective is still being pushed by our retail investors, particularly local retail investors. But in terms of holdings, I still believe that institutional investors might still hold a larger chunk of when you look at capitalization, because a lot of the largest capitalized companies have significant shareholding by our institutional investors, particularly our two pension funds, NSF and PSF. But it's something that I'll need to get into more detail, Henry and other investors, to get back to you. And connecting that to the next question, the PE ratio, again, this is something frankly, the head of this call hadn't computed, but it's something that can be made available. And just share a number of our licensed dealer brokers do compute this, and they share this from time to time as part of their research responsibilities as licensees of the DSE and CMSA. They do share the PE and other ratios, important ratios that help investors in making decisions. They share by company and by sector as well. It's something that can be made available. I'm sure iTrust would have this handy and they could help us to share this after the call. The next one from Erasmus, again, is asking for the slides, which we've promised that we can share. Lucas, please see if we can share here so that we don't have to start sending emails to 120, 30 plus investors. See if we can share the file here.
Yeah, we have another question.
The next one, when the government equity is going to be listed on the DSE. The best information that I can share is from the Treasury Registrar, who is the custodian of these shares. Earlier this month, DSE celebrated 30th anniversary, and we had a grand celebration on the 3rd of July, which was preceded by Building Africa Financial Markets Forum, where as DSE we hosted other exchanges and financial institutions from across the continent and beyond. And it was held at the Hyatt on the 1st and 2nd of July. And the Treasury Registrar, Mr. Nehemiah Kendom Checho, opened the seminar on the 1st of July, and he closed the seminar on the 2nd of July. And in his closing remarks, he mentioned that the Treasury Registrar's office has earmarked about 4 to 5 different companies, corporate state-owned entities that are prime for listing. And the plan is to start listing those within the second half of the year. So it's work in progress. The groundwork has been done by the Treasury Registrar's office in collaboration with other institutions such as the DSE itself, CMSA, the central bank. But the question as to when exactly will come, it's the Treasury Registrar and the respective boards of the institution that will be able to tell for sure. But the promise that had been given by the Treasury Registrar is that it will become before the end of this year.
Right. Thank you, Mr. Peter. We also have a question. Can you give some color on the shillings bond listing on the LSE?
Okay, I can. That is not. It wasn't anything driven by the DSE, but I am privy to the information. But basically, NMB had been looking for TZS funding, and through conversation with various institutional investors, they had a discussion with IFC, the International Finance Corporation, and IFC agreed to advance that funding by raising that funding from international markets. So what they did is IFC is actually the borrower on record, and they're issuing the TZS bond, and they've listed it on the London Stock Exchange to attract international investors. And basically, the international investors who subscribe to this, they'll be taking the currency risk on this. And it's being listed on the London Stock Exchange to make it much more visible and to have it much to increase the liquidity profile of the issuers and attract more institutional investors and entice them to take the currency risk. And the full $100 million or so that is expected to be raised will be on lent to NMB for them to then lend to clients across various segments, including SMEs, the underbanked segments like youth and women, and also lent to commercial entities as well. And all this was shared by the CEO, the NMB CEO, Ms. Ruth Zepuna, and it's available on the internet. One source that you can look to is on the Citizen's Instagram page. There's a video of Ruth talking about the transaction if you need more details. Okay, there are a few questions that I see from Mr. Victor Muta. What initiatives are in place to maintain the market growth momentum? So there are a number of things that we're looking at. On the first part, we're still focusing on increasing our investor base by making it much more easier for investors to sign up. and also increasing investor awareness, investor education through various forums such as the quarterly investor calls, such as the one we're having right now, various other outreach through the media, through different national events such as Sabasaba and Nane coming up. We also do have the Scholar Investment Challenge, the university students, where university students compete, and we do have various other engagements with other financial service providers, banks, mobile money operators to integrate and reach out to more investors. Additionally, we're also looking to bring more products online. There's a number of new products that are in the pipeline that are being reviewed by DSE and CMSA, which we hope will attract new investors. And last but not least, new listings as well, both fixed income and equities. Equity has been quiet for a while, but we do have a pipeline on that front as well, which we hope will bring in new investors. And one thing that we've learned is that by having IPOs go through DSE second gen, it's helped us also increase new investors, as it's made it seamless for new investors to come in through the IPO windows. Also for Muta, it says there's the new system. Basically, this is the new version of his again. It doesn't allow to buy shares in batches of 10s. I will allow our CTO, I hope Ali is on the call, to comment on this. And thanks for that feedback, Muta. If it's a glitch in the system, it's something that will correct, but our CTO will be able to provide more detail. And last, it's a comment again from Victor Muta. It's not a question, but a recommendation. Please record a step-by-step video walkthrough for various app actions that people can send each other to simplify onboarding process. Okay, I think this is just a walkthrough video of DSE's second journey app device functionalities. There is something that had previously been created, but since we have a new release, it's something that we've taken on as feedback, and we'll prepare something and put it on our YouTube and other social media channels. Ali, on his second journey and the ticket sizes for purchasing new shares, can you comment on that if you're on the call?
Yes, Chief, I'm on the call. Of course, we need to look at this. I know most of this control, they also go with a cap limit and the like. So we'll look into this before we go live 100%. If there is any glitches, it will be taken care. But any features that is available in the current system will be available in the new system. But we'll look into this as well. Be rest assured. And on the step-by-step video as well, we'll do this and try to release. Of course, we have tried to our level best, because this is an app to make sure that people they are not supposed to be taught on how to use the app. So among the key issue when you have the app is to make sure that app is self-using. But 100% will produce some videos, very short videos, but we want the system to be self-usage. So the feedback, the comments will really improve the system. And we're really thankful for the investors, because they are giving us many positive feedback.
Thank you, Ali. And just to add for everyone on the call, the reason why we have a parallel run between the new MTP and the old one, for a week and a half from the 21st of August, we released the new version on a parallel basis, is to allow for investors to, if you want to transact urgently and there's an issue with the new version, you can revert to the old version and transact. But we also want you to test the new version, so that you can give us feedback on the how user-friendly it is, if there are any glitches, issues, etc., so that we can correct it before going live fully on the 1st of August. And even after go live, any system, there's never a system that is ever perfect. Even the big guys, the Microsoft and the Apples of this world, they always release patches to correct, they always take feedback, etc. So we in more than happy to receive your feedback on where we can improve, and if there are any issues, or even if there are no issues per se, but areas where we think we might be able to improve, please do let us know, because we want to have a very smooth and enjoyable experience for our investors when they access our system.
Thank you so much, Mr. Peter and team, for a wonderful Q&A session.
Sorry, before you proceed, Winifred, I just noticed I misread Victor Muta's question earlier. So Victor Muta's question says the new system only allows batches of 10, 20, and 30, but the old one would allow odd numbers. I don't think this is quite correct. Even the old system would only do transaction in multiples of 10. But if you had posted a transaction and it had expired because you didn't get a matching price, you had to repost, then the reposting would be at let me say multiples of 10, because it will take the amount that had been deducted and look at the prevailing price, the new price that you want to set it at, and it will give you how many shares you could access. But by default, we allow for multiples of 10, and that's what our trading rules say. So if the new system works in multiples of 10, then it works according to design, because that's how our trading rule says. Unless down the road we decide to change the trading rules. For example, in Kenya last year, they allow us as low as one share to be a complete transaction. Then we may revisit how the configuration in the app as well. Thanks, Winifred, and apologies for interrupting. I just wanted to clarify that.
Thank you, Mr. Peter. Okay, we'll finish with one last question. Does the DSE balance the benefits of foreign investor participation with potential risks such as capital outflows, market volatility?
I'm not sure what Charles means when we ask whether DSE balances, because as DSE, we're open to all investors, local and foreign, and so we do not necessarily put any caps or controls on what kind of investors that come in. And of course, with any market, when there are always ups and downs, by having a market heavily accessed by foreign investor, it means that you do get a lot of effects as a market, as an economy, but also you have potential capital outflows in the time when there's market uncertainty. Because remember, during crisis events, during events or times of volatility, frontier and emerging markets do experience capital outflows to developed markets, flight to safety. That said, currently DSE is the trading volume still largely controlled by local investors, but that's not to say that we do not welcome or want foreign investors. We had seen a departure of foreign investors over the last few years from COVID times, followed by the Russia-Ukraine crisis and other global geopolitical issues, but we are working hard to attract more foreign investors to come back to our market. That's why we're publicizing the growth of the exchange. But additionally, there are some coming changes in regulations that the BOT is working on, which will make it even more attractive for us to attract foreign investors. And with other developments happening, for example, with the listing of the first shilling bond on the LSE, to also help profile our market even more. So the best thing is not necessarily for the exchange to control what happens in terms of the type of investors, but to make it a friendly market so that you attract investors who come in and stay. There will always be trading, there will always be buys and sells, but for any foreign investor that sells, hopefully you have more foreign investors coming in and buy, so that we don't face a flight of capital and FX liquidity crisis as a market. And I think, Winfried, there's a question that we had skipped. Couple, I think. There's one from Onesmo Kitosi, say on the new system you can't place the order and remain pending while the market is closed. Ali, maybe if you can pick that up. And there's another one which I'll respond to. What role does DSE play in ensuring companies that are such as DSE, YASA, list, etc. As exchange, we do have a business development function, and part of the business development function is to increase awareness for both the investors as well as the issuers. So we do work with the issuers to understand their concerns, to give, first of all, to train them, give them awareness. If they have any concerns, to see how we can work through their concerns, in convince the management and eventually the board and shareholders on the advantages of listing. Eventually, decisions to list lie with shareholders, and there will be various reasons why one shareholder would choose to list and another wouldn't. But there are a number of companies, big companies that are on the pipeline that will be coming to market this year and the next 3 years. Ali, if you can comment on the
Yes, Chief. If I read here, investor is saying that on the new system, you can place an order and remain pending while the market is closed. For sure, when the market is closed, and when you place an order, the order will go to be pending, because at that time, no execution will happen on the engine whereby the trade they are supposed to match. And as I said before, all the features that we have in the old system will be in this system. So when the market is closed, you place on any order, the order remain pending. And when the market is open, if there is no glitches, automatically the ATS will take the orders and execute. That's a design in place. But as you know, this is a new system. Maybe at the time when you places the order, there was any glitches. But as it is, among the key principles that we have implemented in this system is to ensure that everything will be done by the system itself. We wanted to make sure that we minimize the number of manual process, the number of hands. So that's by principle. When you pay, when the market is closed, it will go to pending. When the market is open, you will see the status, are we to trade, fulfill the or partial fulfill. That's designed by principle. Thank you.
Thank you, Ali.
Thank you very much, DSE team. And I'd like to hand over to Solomon for the closing remarks.
Thank you very much, Mr. Peter Nalitolela and Mr. Lucas Nkala, for the detailed insight on the Q2 performance and the questions that you've answered to investors. I hope they're all satisfied with your feedback. In case anyone has any queries, please do not feel afraid to reach out to us, and we shall definitely respond. Thank you very much, and congratulations, Peter and team, on the outstanding performance for the Q2.
Thank you.
All right, thank you.
Thank you.
Thanks, everyone.
Thank you, everyone.